Hi everyone, this is Sandeep. Welcome to my YouTube channel. Today I'm going to analyze 7 stocks. So I will start with the Asian Paints. As you see, Asian Paints is a leader in paints products in India for residential and commercial buildings. Now if you see the PE ratio is 98. It is an expensive stock, and I will show you the reason also why. PE ratio, the PB price to book ratio is 23.39. Let me go to 1 year. Last 1 year, as of 23rd February, is given around 36% returns, which is very good, I would say. Now let me take you to financials. If you take on a quarterly basis, there has been a consistent growth. Even the earnings, the profits, consistent. Even if it's December 2021, 1696. Okay, from the year to year, December, yes, there has been a correction. But whereas if you see September, so we need to see the FY22, but if you see on an overall basis, year to year, yes, from let's say December 2021 to December 2020, yes, there has been in the margin pressure, especially in the profits, and also with 1166. Yes, so definitely the profits are coming down, but the revenue is going up. Okay. And if you see the balance sheet, there is not much change in the balance sheet. Liabilities all the same. Cash flow, yes, it's been increasing very well. So definitely this is a good stock to invest. Just that, make sure just see the profitability. That is the only thing. If the profit increases, yes, it will do well. So this is my opinion about the Asian Paints. I'll have one more look at the income. 454. If you see on year-on-year basis, yes, the profit, the earnings, and the revenue has been increasing. Whereas if you see from a quarterly perspective, some kind of, if you see from a 2021 to 2020, it's not very significant. Okay, the next one would be Pidilite Industries. Pidilite Industries is into adhesives, and even the people have only 5% of suggested. Now if you see, P ratio is 107, and the price to book ratio is 20. If you see, the revenue has come down, however the profits have slightly improved. Let us see on a quarterly basis. Okay, this December the profit has come slightly down, whereas December 2021 662. Yes, the earnings and the profit December 2020 are slowly coming down. If you see from quarter on quarter, when you compare 2020 quarter to December 2021 quarter, 5034. Only this December. If you see the balance sheet, the debt to equity is 4.0, which is perfect. Let us observe this one. You can see the liabilities, not much change. They're investing a lot. There is net change minus. The capital expenditure is 353. Free cash flow is 1000. Yes, if you see the cash, they're investing a lot. I think they're growing. So let us see the news. My opinion would be to just keep accumulating the shares. Let me look at here. The ROC is 30, RO is 22, which is good. Sales have been increasing. Profits are also slowly, if you observe, they have been increasing. The profit before tax, yes, is also not bad. It's a compounding stock. Liabilities are slowly increasing. Only the cash flow has swelled up a lot. Hope it doesn't continue like this for the next year also. I would say you can accumulate it. Now the next one, which is Reliance. This is a large conglomerate. The revenue has come down, however the profits have slightly improved, no doubt. The revenue has come up. Profits are also coming up from a quarter-on-quarter basis. It's been a very cash negative company. There is probably, we need to see why. Investing a lot. Not a new item. Whereas finance, net change has been negative. Change in working capital. Free cash flow, it's been minus 79. So probably we need, what I feel is they are investing in new initiatives. Debt is coming down actually, if you observe. Liabilities are slowly coming down, which is a good thing. 70%, whereas the industry was 78. You can slowly accumulate this company. Next is ITC. Famous for cigarettes. Profits are coming down from compared to previous year FY21. Revenue is going up. The profits are also slowly coming up. Okay. Now if you observe, not bad actually, it's doing quite well. Cash flow. Okay, where are they getting a lot of cash from finance? Minus 18,000. That's a big one. Net changes of minus 366. Not much debt. Balance sheet is more or less flat. See, there is a possibility that ITC can unlock itself and go to the next level. This is a good, maybe you can accumulate little bit of shares. Next, what I would go for is TCS. One year it has given around 20%, which is very good. It's a IT consulting company. Revenue is increasing very well. So if you see on a quarterly basis, consistently performing very well. Excellent, it has been good. Cash flow is a challenge. Free cash flow, it is getting a lot from financing activity, whereas yes, so right now they're having the change in working capital is minus 8,000. Lot of capital expenditure is happening. Free cash flow is 35. You can accumulate this stock, small quantities. Next would be SBI. SBI Cards. 1 year the return is 22%. It's less. Analysts are saying 95%. People are saying it's good. Let us see why. There has been a consistent, it's been very flat, extremely flat, but profits are coming down, no doubt. Revenue is going up. The profits are also with December 23 and 4. Okay, not bad. September, it's good. September 2021, yes, there's been a, you see, September 2021, 2020, from 1 year there's been an improvement. There is an improvement. The last 2-3 quarters there is a growth. The cash flow is okay. Net change is yes. Change in working capital minus their capital. Free cash flow 653. There has been a turnaround in this stock. From a cash flow management perspective, there is an improvement. I see that they are investing a lot, and if you see cash flow from operating, finally it's been generating money. I feel this is a good stock. Definitely it's a good stock to buy. The cash flow is improving. If you see loan and advance is okay. Current liabilities. It's okay. Accounts payable, yes. No, it's more or less flat. I would say you can buy this stock if you believe in the payments. SBI Card is into payment services, payment processing, and they manufacture cards for the end customers. Mostly it's in the payment business industry. Definitely can accumulate. Then next is Godrej Consumer Products. 1 year 18%. From a high of 63 to a low of 27. What is the reason? Finances are going up. Profits are also doing better. Let us see on a quarterly basis. It is increasing, no doubt, but if you see December 2021 and December 2020, slight reduction. Balance sheet debt is 48%. Highly leveraged company. Please keep that in mind. The debt is coming down, however, the current liability is coming down, no doubt. Cash, it's been negative, but if you observe, it's been going down. Cash management has improved from the previous year. So free cash flow has increased a lot. You can definitely accumulate this stock. Hope